Bitcoin has been consolidating in an incredibly tight range for the past 8 weeks. A break of this range will likely result in a high time frame continuation for Bitcoin. In today's video, we're going to be discussing the short-term price action, the recent failed breakout, the announcement from Jerome Powell in regards to future interest rate cuts, and so much more. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you all having a fantastic day today. In today's video, we are going to be taking a look at Bitcoin from a weekly perspective, a daily perspective, a short-term perspective, and even taking a look at a particular fractal in regards to the total altcoin market cap. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos on Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, Bitcoin, and the relevant economic news. If you are interested in trading, join our VIP group. You can find more information about that in the pinned comment of the free channel. In the VIP group, we post trading setups of the exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis, as well as you'll get access to our group chats, our general chat, our trading chat and education chat, our news chat, our trade setup chat, and our help chat. If you are interested, you know how to contact us. Let's go ahead, guys, and jump on in. So starting on the market data, how are we currently looking? 24-hour volume is up 43%, sitting at a total of 78 billion. 24-hour liquidations have jumped up a total of 32.81%, sitting at a total of 97 million, so relatively high. Of the 97 million, 63 million have come from long positions and 33 million have come from short positions, as Bitcoin saw what was a breakout. And it ended up being a failed breakout, but it held that breakout for about a 2-hour period over our major 7-day downtrending diagonal resistance. And we saw a break toward the upside, sparking what would have been a nice move up to that 44.25k level. But then we got some news from Jerome Powell's press conference, specifically stating that they are actually moving towards the interest rate cuts, the easing of the interest rates, but not as soon as everyone was expecting. And that kind of resulted in a bit of a pullback for the markets, the stock market, and for Bitcoin, and coincidentally it happened at the same time Bitcoin broke out, which resulted in, again, a lot of late long or early long liquidations as the price moved back into this pennant formation. We'll be discussing this in today's video. Moving over to the DXY, the DXY is still looking very strong. It has continued to move upwards again on the backbone of what Jerome Powell came out and said yesterday. It did continue to move upwards through that 104 range, approaching that 105 resistance. We are still looking for a move to 105 to 105.6 in the days to come. We do have to note, the higher the DXY goes, the greater the probability of a correction. We are looking at this major uptrending diagonal trend line. When this level does break, that would mark the trend has flipped it downwards, and we would expect a correction to occur. Whether that occurs here or whether it occurs much higher is soon to know, and we'll definitely keep an eye on that as it progresses. Moving over to the broader markets, the S&P 500 has still challenging that 5,000 level of psychological now hard resistance. Again, a break above this level will likely result in a continuation into new all-time high prices, whereas a failure to get above this level will result in two things. One, sideways consolidation, or two, a healthy pullback into our prior all-time high to retest this area as support before we do continue upwards. This would be the ideal scenario in terms of macro health for the market. If we were to lose the range low at 4,750, the range low, that would be very, very bearish and could result in a correction lower. Moving over to the Dow Jones, exactly the same thing happening over here, guys. We are looking for, again, a potential healthy correction down into the support zone, retest this area before we do see a bounce. if we do come down any further and break below this range low at 37,700, we could see a retest of that prior all-time high. If we are able to break above that $39,000 level of psychological resistance, we could expect a continuation up to that 40k level. With that being said, guys, we'll jump over to Bitcoin. Like we said, we have a lot to talk about today. A quick word from Bitget and BingX and we'll jump in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and jump over to Bitcoin. So a quick summary on what we'll be taking a look at. We're going to be taking a look at the weekly consolidation range that we have been moving within for the last 8 weeks. We're going to be taking a look at the daily chart in regards to momentum, the RSI trend line we have been tracking. We're going to be taking a look at the short-term price action, the recent failed break of the pennant, the current structural formations on the short term, and our trigger points and targets for the next moves. And we're going to be taking a look at a particularly worrying fractal for the total altcoin market cap in relation to prior Bitcoin peaks and pullbacks. So let's go ahead and jump in, starting on the higher time frame, moving it down in order what we did tell you. So as you can see, guys, the last 8 weeks, and this is an 8-week range, Bitcoin has been moving quite tightly within a 6% range. Now, a 6% range is by no means small. Okay, 6% is relatively large. We do have to orient ourselves a little bit, but over an 8-week period, then it becomes quite tight. So 6% range over an 8-week period, we're looking at candle open prices and candle close prices, not these wicks toward the top and bottom side. It is in a relatively tight consolidation range. This is going to be marked as a horizontal, or better known as a sideways consolidation range. A break toward the upside of this range would require a weekly candle close above 44,000. A break toward the downside of this range would require a weekly candle close below 41,300. Either weekly close we get will result in a weekly candle moving into and likely closing within. This is important. Moving into and likely closing within the upper level of resistance at 46 to 48, or the lower level of support at 38 to 40. The weekly break and close through this range, or be it a range high or the range low, will not indicate whether or not Bitcoin is going to break above the level of resistance or below the level of support. It indicates, as a matter of fact, that the price is likely to move into that range. So it's more of a directional trigger rather than a trend shifting trigger. Okay, so keep an eye on that one, guys. It is a tight range and it is a consolidation range. I like to think of consolidations like pressure cookers. The longer it is cooking up, the longer the pressure's on, the more pressure builds up, and eventually the more violent the explosion actually does occur. So when you have this long drawn out consolidation, it has more time to fill up liquidity, fill up volume, and eventually when those floodgates break, whether it be up or down, we see much more of a volatile and violent reaction upon that breakout. Moving over to the daily chart, we are still keeping a very close eye on this RSI trigger, and this RSI trigger is something I've been watching now for I would say about a week we've been keeping our eye on this one. And if we do see a break of this RSI trigger, that will be a fantastic indication that momentum within the cluster of price action, right? If we look at this cluster of price action, better yet, let's go ahead and just move this box up so we can see it. This is going to be the cluster of price action we are viewing, and we can see that cluster of price action as it is reflected by the RSI over here. And again, the RSI is simply but a derivative of the price action itself, right? So it reflects overall momentum, momentum being the speed of change in regards to the buyers and selling strength over a period of time. So when we see a significant shift in buying strength, that is going to indicate momentum is moving upwards. And if we see that over a period of time, it could indicate a potential reversal is coming. It could indicate absorption is happening. It could indicate strength is flowing back into the market. So what are we seeing over here? And the opposite for exhaustion, of course. What are we seeing over here? We saw in this entire cluster of price action, momentum has been moving down. We are decreasing. Momentum is falling. This is obviously a sign of weakness, right? We saw a bearish divergence over here, higher highs on the price action, and we saw lower highs on the RSI. This resulted in a steep correction down to our nearest support level. That RSI trend line has been dragged across and it's still very much valid. And if we do see a break on the daily, all we need is a daily candle close above this level. That would indicate within this cluster of price action, the momentum has now flipped from negative to positive. And this will be very, very good in terms of a continuation back up to that 46 to 48K range, potentially where we'll then reject and continue lower or break through. So definitely something to watch, guys, on the daily chart. That takes us over to the short term. So a lot is happening. And as I always say, the short term really is the most important, because the short term puts the stepping stones in place to achieve those higher time frame targets, or builds into those higher time frame trends. So when we're looking at these high time frame levels, breaks of these high time trigger points, breaks of the RSI, we need to see specific things occur on the short term for these things to actually develop and occur on the higher time frame. And one of the things we are watching at the moment, and which I think everyone in cryptocurrency, particularly who are following Bitcoin at the moment, is this current formation. This formation is going to be our pennant formation. So let's run through this formation and let's talk about it. In the last 24 hours, we saw a pennant formation develop as we've been creating, okay, higher lows. We had 3 higher lows consecutively, and we have lower highs printing within this range. This is a pennant formation, right? We have a consolidation, which is compressing to an apex point over a period of time. This generally is what we call a neutral consolidation, okay, as the trend angle upwards is more or less equal to the trend angle downwards. A trend angle is another representation of the strength of the trend. The strength of the trend is made up of buyers and sellers. So when we have a trend angle which is almost equal, we can almost explain that as we have equal selling and buying pressure going on within this consolidation range, and thus it is a neutral pattern. If we look at it from a structural perspective, the price action entered the pennant from the bottom side up, and thus we do have a slight directional bias to exit the pennant toward the upside, which we actually did. And this is where it becomes very interesting. We actually saw a break toward the upside, and the break toward the upside was a valid break toward the upside as we had completed our 5 points, point 1, point 2, point 3, point 4, point 5. We had 5 points of retest before the breakout, which led us to believe that was a valid breakout. And it was until Jerome Powell came out and talked about how interest rates are likely not going to be reduced until later in the year. And of course, that pushed the market down, as that goes against the overall narrative, which is we were going to see an interest rate cut as early as May 2024. So what does that mean for the price action? It means nothing. Simple as that. It means we are still within this pennant formation. We are still within this range. It does indicate that we did see a failed break, which potentially adds negative pressure and could increase the probabilities of a break toward the downside. However, we cannot assume that is going to happen until we do see the breakdown of this pennant. At the moment, we are in a neutral consolidation, and we would expect as we approach the apex, as we are getting very much closer within the next 24 hours, we would be expecting a directional break. And the directional break that does actually follow this would and should be assumed to be the direction of which Bitcoin is going to continue in. So let's go ahead and do a simple measured move analysis. A measured move analysis from point 1 of the pennant to point 2 of the pennant to the upside break. Okay, if I don't know what happened there. If we apply... Okay, no clue what's happening on my chart. I think my cursor is going a little bit weird. Oh, there we go. I fixed it. I clicked the wrong button. So if we take a measured move analysis, sorry guys for that one. If we take a measured move analysis from the point 1 to point 2, apply it to a perceived breakout point. Let's go ahead and say the perceived breakout point is going to be sitting right over here. That would take us to a price point around 45,000. 45,000 is by no coincidence a major area of resistance. If we do zoom out, we can see we have a nice VRPV gap over here, which is an area of liquidity. And we can see we have our range low and range high over here at 45.5 to 46k, 46k being that major area of resistance. So the best case scenario from this breakout would be a break of the pennant, a move to 44.25k where we would challenge our first major resistance. Like we said already, if we reach 44.25k, we likely flip positive on the daily RSI, which drives the price action higher, which would push the price into this upper range. That would be the bullish scenario. The measured move tells us that that is a valid and reasonable, this is the most important thing, it is a reasonable target, okay? It's not an unrealistic target according to our structural analysis. If we apply the measured move to a downside break, we can see upon the breakdown the pennant, that would take us to fill the lower gap in the VRPV, which is sitting around 40,500, which is going to be that major area of high time frame support, which would result in, if lost, a move to 38,000. Again, a breakdown of this level would result in the price action losing that weekly low. So you can see already a break up of the pennant results in a break of the weekly high, a breakdown of the pennant results in a break of the weekly low. And that is why I'm telling you right now that the short-term price action right here is so important. That's why we're seeing this range being drawn out, because it is very important in terms of the directional moves for Bitcoin. Now guys, that doesn't mean that if we break above this pennant and go up, Bitcoin is looking fantastic for a continuation through 48k. Remember, according to historical data, we do not expect to see, okay? We do not expect to see a break of 48k on the monthly chart until only after the halving, which is in 70 days from now. If we look at historical data, we had a break of the monthly dotted trend line here, a break of the monthly dotted trend line here. Both of these instances occurred after the halving event. If we see the following occur again, that would mean only in the next 2 months we would see a break of 48k on the monthly. That could be invalidated. Who knows for sure? Just something to keep your eyes on. If we zoom out to the higher time frame again, what is very much important is that on the high time frame charts, it does suggest high time frame strength, and even if we do see a correction, the macro charts would look incredibly healthy still, provided the correction does not take us underneath 32,000. So if we do see a pullback into 38, that is fine, it is healthy. If we do see a pullback down over here, that is fine, it is healthy. Of course, it is not fantastic for the short term, but for the macro term, it is still okay. And that is what really matters. What is the price action for Bitcoin going to be doing in 12 months from now? Is Bitcoin going to be entering a bull market? How is everything shaping up? And the answer is everything is shaping up according to what is expected and what is planned. Now, there is one particular thing I want to discuss, which is worrying me a little bit. And, you know, I want to just make this very clear before we do this analysis, before I talk about it. There's data you can use to kind of cherry pick any narrative you really want in the market. And there's data that will suggest the market's going down at every particular time. And there's data that will suggest the market's going up at every particular time. It is your job to assess that information, okay, apply it to the context, and then assign probabilities to that to, you know, give you a bit of an understanding about the validity of this information. Because if you just take everything at face value, you're just going to be confused the entire time. So this information, I'm not giving it to you because I believe it's going to happen. More so, it is something that we have seen before, and thus it is something we could potentially see again, and we do need to be aware of it in case the validation for this scenario actually activates. So this is going to be the large macro monthly chart for Bitcoin on the left, and this is going to be the total altcoin market cap on the right. This is excluding Bitcoin and Ethereum. What we have seen historically on the total altcoin market cap is, again, we've seen the all-time high, we see a correction through all the way to the all-time low, a correction through all the way to all-time low, and then we have this particular sell side liquidity level, which is represented by this horizontal black line. What we have noticed in both scenarios is that we actually break over the sell side liquidity. Okay, point number one, we'll name this point number one and point number one in two instances. We saw over here and we saw over here. Now this happens in two scenarios. It happens under two validations. Validation number one, it happens, point number one occurs before the halving event, the red line, okay? Before the halving event, the red line, and occurs when Bitcoin retests the dotted trend line. If you look at the chart, this point here lines up with the exact point one here, and this point one lines up with this exact point one. So that leads us to believe if we see a rejection from 48K, which we have seen in the past, that is strong enough, okay, to take Bitcoin potentially down to 32,000 again. It's not valid until we break 38K. Altcoins could be in a world of pain. If that does happen, we could see deviation back below that sell side liquidity level, which would take altcoins significantly lower toward the downside, potentially to retest this 400 billion level, which is about a 20% correction from here, if I'm not mistaken, okay, before finally breaking through, okay, that level again at point number two. Where does point number two line up with? Point number two lines up with point number two on the Bitcoin chart, which is when we had the monthly candle close above the dollar trend line, which sparked that bull run. Point number two needs two validations. Number one, the monthly candle close above the dollar trend line, and number two, it occurs after the halving event. So point number one can't be point number two because it is before the halving. And point number two can't be point number one because it will require Bitcoin to break 48K, which we don't expect to happen before the halving, until after the halving event. So there's something to keep your eyes on, guys. Again, it is telling us that if Bitcoin corrects, altcoins could see quite an aggressive pullback from here, from where they are now. Something to keep your mind on. Again, there is data to suggest everything. To give you an example to why there is data to suggest everything, if we go to this weekly chart, we can see if when we broke above the Gaussian channel on the 3-year over here on the weekly, we never retested it again. So the Gaussian channel weekly is sitting at around 32,000. That would suggest, according to historical data, we would actually never retest that level again. Furthermore, if we take a look at the baseline of the Ichimoku cloud, which is going to be this red line, we can see we never break below that on the weekly chart when we have when we broke above it in 2016, and thus we have evidence to suggest that we would never break a weekly candle back below 36,000, which wouldn't even result in a move to 32K, which would indicate that if we did see a correction in altcoins, it wouldn't be as aggressive as this chart is actually suggesting. So again, there is data to suggest everything. It's your job to understand it, review it, apply it to the context, be aware of it in case it does trigger, and then execute if it does. For this particular scenario, for this example that I've given you, for this analysis to play out, two things would require to occur. One, Bitcoin will need to break below $38,000, and two, the total altcoin market cap will need to deviate below this sell side liquidity level, this level of resistance, and break back below this trend line. Do you see how it's sitting above that trend line? Let's zoom in. Do you see how it is sitting just above that trend line? We would need that to break underneath it. It would have to break underneath this trend line here on the weekly chart to validate a potential correction. We would look for, again, this level at 420 to potentially 400 billion as a bouncing point before a continuation upwards. In fact, if I was looking at the charts and I'd say, you know, what would be healthy for the charts over here? Ideally, I would actually like to see that occur. Again, don't want to keep any biases over here, but if I was looking at the chart from what is the most healthy thing to occur for altcoins to have that launch pad for that high time frame continuation, that would be it. That would require Bitcoin to actually drop. But again, we have to keep non-biased and remain objective and just analyze the charts as they occur. So thank you for watching. If you have any questions, let me know. Let me know what you think about this analysis, because again, at the moment, it is speculative. I haven't seen anyone talk about this yet. In fact, I just came to my mind yesterday when I was looking through charts. I was like, holy hell, this is pretty interesting. This is a pretty common fractal and pretty interesting fractal, and it could play out again. So something to be aware of, and I guess that's how all these amazing analyses come to mind. When you're just going through charts, you have no intention of really finding anything, you're just looking, and all of a sudden things pop out at you. So I'll catch you guys in the next video of that, and guys, check out the Crypto Academy courses if you're interested to trade. 10-year course, everything you need to know about TA and analysis is in here. You can contact us via the email below, or check out the website in the pinned comment. Cheers guys, and I'll catch you guys next time.